everyone, and welcome to our first AML Gray Matters of 2025. I'm thrilled to see so many familiar faces and a warm welcome to those joining us for the first time today. Now, as we step into 2025, we remain committed to deepening our understanding and enhancing our practices around AML compliance. And we're fortunate to have Angela Mealy from RiskPass based in the Cayman Islands. She's joining us again today, so welcome back, Angela.
Thank you very much.
Angela has over 20 years of experience in international financial services, and she brings a wealth of knowledge with her background in regulatory and fund services. And she's also a certified advanced AML audit specialist. So again, welcome back. Happy 2025, Angela. We've spoken a couple of times. You've gotten over the flu that's going over. It's global these days.
Decimated everyone, yes.
You made it. Thank you. I know you're probably struggling a little bit. You can hear my voice too. It's a little depressed, so I do hope everyone's doing well today. And Angela, are you hosting or you're teaching at the Funded Admin Conference in February?
Okay, so I am secretary to the Cayman Islands Fund Administrators Association, which is a not-for-profit. Every year we do a 2-day fund administration course, which takes the attendee through the life cycle of a fund. All right, this will be the first time next month on the 12th and 13th of February that we are offering this remotely. We've always capped our attendance to maybe 25 or 30 locally. So we are putting this out remotely to people globally because there are so many people out there in jurisdictions such as Dublin, Halifax, India, South Africa, who are working on Cayman funds. All right, so this gives you a really good overview. Timing may not always work for the jurisdiction, but we'd like you to at least get onto the cfa.org.ky and take a look at it.
Okay, great. And we'll make sure we kind of repeat that at the end with a little bit more detail. So that's great to know. I might even try and join in on that one.
Yeah.
Because funds is very interesting. I'm learning quite a bit about funds. So, I guess I need to change my slides over. So here we go. All right. So today we're going to be just discussing these corporate documents. And just so you know, it's a critical topic and it's a pivotal, these corporate documents, they have a pivotal role in AML compliance efforts. And so we're going to be exploring how corporate documents provide the cornerstone of your risk assessments and understanding of the beneficial ownership and control of corporate entities. Before we begin, though, a little bit of housekeeping. Sorry, this is the agenda we'll be going over for those of you who need that. But again, a little bit of housekeeping. So again, I am not a lawyer. Angela is not a lawyer. So this is not legal advice. We take about 1 hour. There is a certificate of attendance that you will get for all live attendees only. We will take some questions at the end. And of course, we have some, Silo has some upcoming events, again, some certified Silo user training. The next one's next week. And then of course, our next one is some digital assets on 12th of February. That will be an hour-long AML webinar too. So again, we'll send that information out. All right, so we're going to be covering in today's broadcast some common entity types in the next hour. But I also want to take a moment and acknowledge that the AML compliance officer today is met with so many new challenges introduced by innovative corporate tools, what some call hybrids or derivatives of these common entity types that we're going to be discussing today. Now, some of these hybrids are not new, but we're coming across them more frequently with a lot of the cross-border transactions. And in addition, you have virtual assets, you have tokenized funds, and more in the ever-evolving landscape of AML. So, but it's that complexity of the international financial landscape is why understanding the basics is so critical. And by understanding these traditional corporate forms, you can approach the more complex hybrids and adapt your procedures as corporate forms and technologies do evolve, it seems like on a daily basis. Now, Angela, what's been your experience in your consulting role with so many firms when you come across these hybrids and these derivatives, these new innovations?
Kim, I'm coming across everything. And we are seeing DAOs, which is decentralized autonomous organizations.
Organizations, yep,
Okay.
I'm learning about those. Yeah.
Okay. So if you have a few moments, I highly encourage everyone to get online, read about those. Two, as I mentioned earlier before we started, the other day we came across something called a resident LTD guaranteed, which everyone in my office stopped and went, huh?
Yeah.
Back to like the 1970s. We think it may be a strata, but we have to start digging into this. So we are seeing everything. And the one caveat I do want everyone to take away, well, two things. First of all, we're not going to be able to touch on everything in the next hour. We need weeks and weeks and weeks to take a look and do these deep dives. Okay. Secondly, no one is expecting anyone to memorize this. The idea is to just get a good overview. So please don't let any of this intimidate you, and it is completely intimidating, right? Because there's so much. So from jurisdiction to jurisdiction, things change, even with common law jurisdictions that are overseas territories. All right, and in your work as a compliance officer, you will not only have overseas common law territories, but you're going to come across, you know, entities perhaps out of China, entities out of Germany, entities out of South Africa. Be prepared to spend the time to look into these things.
Yes.
It's a constantly moving landscape. But you're right, Kim. What we are seeing um, big time are the new uh, products and services, and you do touch on foundations, and we're seeing a lot of foundations coming out.
Yes, absolutely. So, yeah, so for anybody who has come across any of these hybrids or these new hybrids or even old hybrids, I mean, like I said, you mentioned something that's like, from the 70s. I think what's happening is because we're so global now on all these cross-border transactions, we're seeing more and more. It's not just, when I was a compliance officer in the Caymans, I saw a lot of US and UK, entities. But now I think the today's compliance officer is seeing, as you mentioned, German, South Africa, it's India, and we
Yeah,
cannot, again, yeah, we can't cover all of these in an hour. I picked four. This just the basic company, the partnership, LLC, which is popular in the U.S., and these foundations. And I think from those four, you can then have that foundation to look into and research some of the others. I did want to say, and I want to thank one of our audience members as well for reaching out to me yesterday and saying, "Hey, can you talk about blah?" And it was these onstalts from Liechtenstein.
Liechtenstein, yes, yes.
And
Yeah.
I had never heard of them
Oh,
before.
okay.
So I did some research last night, so I will be covering that a little bit at the end. But I thought it was just absolutely fascinating. And apparently these are from the 1920s.
Yeah.
So it's not new, but I had never come across it. So again, don't feel like if anybody is new, or even if you've been in the industry for 10 years and you're like, oh, I'm still learning. We're all still learning. So
Mhm.
never let any of this kind of knock your confidence or anything. It is just a constant learning process. But if, for those of you who do come across some of these rare hybrids, I would appreciate if you can drop them in the question box, their location and what they're called. And what I'd like to do is I'd like to do another webinar in the future and discuss some of these rare hybrids about how you would go about them. And I do have
And trusts, right? We're not even touching on trusts today.
we're not even touching on trust. Trust alone, or again, a whole day webinar just in itself. I will do one on trust in the future, but yeah, just not today because there's some complexity there. So I'm going to go ahead and get us started here. So again, bear with me. All right. So first slide, just the role of these corporate documents. The fact that they're setting out that legal structure, their ownership, control, and the authority. And again, we'll kind of go into this. So a lot of these slides are really just notes for all of you. Um, they're supposed to help us then identify who has this beneficial ownership, and of course, they do ensure this transparency. I did put together a chart as well. Um, And what I was kind of doing as I was putting together this chart is really what the corporate documents are supposed to be doing is helping us understand the who, what, when, where, and how, as opposed to the why. Angela, did you have any thoughts about this kind of chart as far as a basic understanding?
There are a number of things. First of all, this is fantastic. Okay, so I printed it out and slammed it up on my wall. Thank you very much. Okay, for reference purposes. That, like I said, use this as a reference guide, but also, if anyone gets into this area, don't be afraid to make your own chart. Okay, and so this is once again the old teacher coming out in me. I look at this and this is great, but my real learning, okay, is when I create my own, okay, and because that helps is that tactile connection between the brain and the hand, and every time you write something down, which is why I am queen of the org chart, and we will look at org charts later, okay, this gives you some indication of how this works. And it helps you with your memory 6, 8 months, 10 months down the road when you go back to that file and you pull that org chart, you pull this document, okay? And that's actually, I hate to say it, that's why checklists are good too.
Yeah.
So, and the other thing is just quickly is anytime I ever have anyone come to me and said, I'd like to get into compliance, what should I do? I always say 2 things. You will need to learn the compliance silo, no pun intended, okay, of the industry, but you're also going to need to learn the corporate because you can really understand all the laws, but if you don't understand what these are being applied to, it doesn't matter. So that's why this is so important.
Yeah. And then what I kind of wanted to go back to have a little what I call basic series of this webinar because we can get into all the crypto and the DAOs and the tokenized funds and stuff, but if you don't understand a basic company and corporation, you're never going to be able to understand who owns it. And I think what happens is a lot of people, and I do see this, and I think you and I have kind of laughed and joked about it before, where you get these compliance people saying, oh, can I have these documents? Sure, here you go. And you know they're not reading them. They're just sticking them in the file. And corporate documents must be read. Those Memonarts must be read because they have certain clauses that are so important. I think people focus so much on the register of directors and shareholders or members that they forget that even though somebody could be on the legal title, so to speak, as a shareholder, that ultimately there could be, depending on that class of shares, which we'll go into, there could be some other caveats and clauses that really make somebody else be kind of a major controller. So that's why it's so important to read. But this little chart is very helpful. In a way, it can be a little checklist, your seminars or your bylaws, because again, every jurisdiction uses different terminology too. They might call it articles in one jurisdiction, bylaws in another. Yeah.
And then also at the very bottom, you have the certificate of formation. We call it a certificate of incorporation in the Cayman Islands. That's a standalone document. Whereas there are other jurisdictions I've seen, the certificate of incorporation is kind of embedded into the bylaws. Yes. For some reason, Latin American companies come to mind, or countries. The other thing I've seen, right, which there's a Latin American jurisdiction where the bylaws I saw were in Spanish, and then the next paragraph would be duplication, but in English, and then Spanish, and then in English. So you had to troll through it. And then in the province of Ontario, I have seen documentation come out that's all in uppercase, which makes it so difficult to read.
Oh, horrible.
Yeah. So be prepared. You're going to see everything, right? If you get into the space.
Yeah, and I think that's why when people do get locked into these checklists, and you go, well, I don't have articles, I have these bylaws, or something like that. They get locked into the checklist and they think, oh, but you're not giving me what I need. Well, I'm giving you, what you need because this is what we have in this particular jurisdiction or this particular type of entity. So this is why checklists are good to have to start, but they are not the kind of set in concrete, set in stone. You have to kind of really understand the corporate structure.
Yes.
So, and of course, obviously, that also explains too why the translations in English or in your native language are so important as well. So just getting the Memonarts and saying, yep, that's definitely Memonarts, and then sticking in a file and not reading it because it's, not translated. That's the reason for the translation being so critical. So this next slide here, we talk about, again, these are those key documents. And I apologize for my use of mem and arts. It's Memorandum of Association and the Articles of Association, which we always refer to as the mem and arts. So the articles could be called bylaws, operating agreement, charters, things like that. It's what we call the rules of governance. Have you come across any other names of what I call the rules of governance of an entity? Or
possibly, but I think you've hit on the big ones. And the other thing is the MEMS are basically tell an outsider what the company's about, okay? And the articles are sort of almost like policies and procedures, right?
Yes.
So whereas your articles give you the internal workings.
Okay, yeah. And a note about the memorandum where I talk about the purpose and powers. I've seen so many where it says, the purpose of the company is to do X, Y, Z, but it is so general.
Yes.
It's like, it's
anything legal.
Anything, exactly. It's like anything that's not against the law. You can do whatever we want. So it's not where you're going to go and find and say, oh, they are going to go do, invest in mining or something like that. It's going to be very, very broad. So I blame the lawyers for that. But of course, the reason for that is so that they don't accidentally step outside of scope. Of what they are allowed.
So that's where they give this broad scope.
Yeah, and then those memorandums, that's also where you have your capital structure. So it is still a very important document because it lists the types of shares. You can have multiple classes of shares, and it's in the articles though where the who has those voting rights.
Right. The internal workings.
Yes, exactly. So that's why the two documents go hand in hand. And if a company doesn't have a memorandum, they might have, like I said, operating agreement. And that is where, again, who's got the voting rights, who's got the power, who has the day-to-day responsibility, who's got the strategic responsibility. And there's like another slide about that. And of course, you're going to have directors and registers, whether you have a registered directors and officers, if it is a certain type of entity, and your registers of members or shareholders or partners, again, just depending on the different type of entity it is. We've already kind of mentioned this. There's going to be some careful wording in the memorandum. This is some examples. I've seen things like, the purpose of the company is to engage in any lawful act or activity. I have seen some too where it might say to manufacture, buy, sell, etc. And of course, there's that wording, any act or activity that is not prohibited. So again, it's going to be very, very broadly worded. And then I was also going to set out some different this is capital structure. These are your share types. Common or ordinary shares are the most common that I've come across. I've seen preferred shares. Angela, have you come across any share type capital structure that was unusual in your experience?
Well, like I said just the other day, this resident LTT guaranteed, it's just this unusual thing where we had shareholders who put in $2 or $5, and it looks as though they're limited, and it's also guaranteed. Anyone's guess at the moment. But what we see in Cayman overwhelmingly are two types of companies, either locally incorporated company or ordinary resident company, which can do business locally, and then what are called exempted companies. Those tend to be mutual funds, hedge funds, but not exclusively. All right. But in my world, that's what I tend to see the most. And those companies do business with entities overseas or investors overseas. All right. Outside the jurisdiction. So there are, and I think Bermuda's similar as well, perhaps even BVI. So a locally resident incorporated company has to have a 60-40, 60% ownership with the Cayman National, et cetera. So those are your ice cream stores. Okay, those are whereas for financial services, from my experience, I tend to see exempted companies much more often. Okay, but they're not supposed to be doing business in Cayman.
Right.
All right. Now, once again, you go to Germany, South Africa, there's a whole different approach. Okay. My suggestion as well is look at the jurisdiction where you're working, uh, or the jurisdiction where you're getting your clients. All right. And focus on that and get a good feel for that. And then you can, to some extent, transfer or do a comparison into other jurisdictions. Because I guarantee if you're in this industry long enough, you will not deal exclusively in one industry, or pardon me, one jurisdiction. You're going to see other jurisdictions coming into play.
Yeah. Well, and that's the basics of international finance is that we're dealing with cross-border transactions and things like that.
Yeah.
Okay, yeah, so here again, common preferred shares, again, often don't have voting rights, but sometimes, again, that's where you have to read those articles to find out who's got the voting rights. And just so a lot of you know, a lot of it's about what's the difference, for those of you who are new to this. So you might have common shares or ordinary shares. Then you have your preferred shares. Usually what happens is if the company is being liquidated, it's the preferred shareholders that get it first. Get any assets that are available, they get it first, the common shareholders. If there's anything left, that's what it's all about at the end of the day. It's whenever you're talking about these different types of companies, we're usually talking about tax treatment for the owners, liability issues, and of course in this particular case, with the different types of shares, who gets what first. If there's, you kind of think about, at the end of the day, the business is shutting down. There's only so many assets that can be kind of distributed. Who gets what first? So you're going to have the preferred shares, and then we're talking about like dividends and things like that, and who's paid. Again, you're going to come across the convertible shares, treasury shares, non-voting shares, growth shares. Some of these are more prevalent in like tech startups, for instance, as well. So lots of different shares. And then in the articles or operating agreement, what you're going to look for specifically, you're going to look for various clauses. And these clauses are going to be things about voting rights. Who's got the voting rights? An example is like each share of the common stock is entitled to one vote. Okay, that is giving you that signal, that flag. Hey, these guys have some control. Versus there was some preferred shares that commonly don't have voting rights. They're just kind of taking the financial benefit, but they don't have any control of the company. Now, Angela, do you ever find the situation where you might have a company with ordinary shares and preferred shares, but yet you've got compliance officers still trying to do KYC on preferred shareholders, even though they don't have any voting rights? And what's your experience?
Yeah, because there's the approach here in general that any shareholder 10% plus we're supposed to do CDD on that individual or entity. So there's, and I agree with you, that doesn't necessarily mean that there's the control there. But we also look at it from the point of view, Kim, of where's the money coming from, right? Is there a money laundering risk?
Yes.
So that tends to be a focus on our end.
Would you do full KYC on a preferred shareholder with no voting rights? Or would you maybe just, okay, that's their name, do a background check? If they were, let's say they're like a 10 or 15% preferred shareholder, would you just do a background check, or would you do full KYC? That's getting the certified ID, passports, utility bill, things like that.
I would go 10% plus because that's what our regulations state. But you're right. You're right. The control doesn't necessarily fall to those individuals or those entities. So, and that's once again where your org charts come into play. So you can take a look and say, who owns what, et cetera, et cetera. But yeah, that 10% rule's pretty hard and fast here. In other jurisdictions, it's 25%. I believe in the Channel Islands, Hong Kong, probably Singapore, we have 10%, which gives us a really interesting dive into the companies.
It does. But what about beneficial ownership? Would you call that, let's say, because I understand beneficial ownership is 25% plus. Would, if you had two types of shares, would
Yeah.
a preferred shareholder be a beneficial owner or not, in your view?
Yeah, they benefit.
Yeah.
Once again, not legal advice. So, and hopefully my regulator's not listening, but yeah.
Well, I
So,
mean, again, and for those new to this industry, I mean, if you and I are still kind of like,
yeah,
again, with your 20 years experience, and you used to work for a regulator, you know,
yeah, long time ago, but yes, long
you know,
time ago in a land far, far away.
yeah. But if you and I
Exactly.
are still kind of like hesitant and like, oh, do I, again, this gives the idea of the complexity of what we're kind of dealing with here when
Yeah.
we're trying to identify who's got control, who has beneficial ownership. And you do have, this is where lawyers do come in handy. And if, for those of you who are lucky enough to kind of work, with, lawyers, in house, or you have that access to lawyers, just go seek them out. And, I also heard a great phrase, when in doubt, check the law.
Yes.
Go back to
Yeah.
the law, go back and reread it again, and see it from that perspective, whether it's AML regs, the corporate law, corporate acts there as well. Go back and reread it all again from this perspective, and identify who's that beneficial owner. So it's good.
So, and just as I said earlier, I always take the approach of where's the money coming from? Because that's what, as an AML specialist, that's what we're looking for. Okay, I can have control, but if I didn't put any money in, I'm probably not money laundering unless I'm doing it during my tenure of controlling this company. So, it's depending on the client, depending on the services, depending on what this company does, you may have to go back to the very, very, very beginning. Joe Block set this company up. Where did he or she get their money?
Right.
Yeah, so that's how I approach it as a compliance person.
All right. Good. Yeah. Some other clauses to consider are things that you're going to be looking at, quorum requirements. That means, does the shareholder meetings have to have, a certain percentage, drag along rights, preemptive rights. I won't go into that too much. A couple in the beginning of board appointment and removal. So you're looking at who can remove those directors. The idea too is that you're looking mostly for the majority shareholders, because usually these clauses indicate that majority shareholders have the most control, not just beneficial ownership, but control as well. So that's what we're
And
going
that's slightly changes jurisdiction to jurisdiction as well. Other jurisdictions, it's about the directors really control things, right?
Yes.
So,
Because I was then also looking into understanding control versus beneficial ownership. And control is obviously the influence to direct the management and the policies of a company, and the beneficial ownership is those who are kind of obviously enjoying the benefits financially of the stock kind of thing, and the control. So that's where I was kind of like, okay, well, if I'm sorry, did my camera just go out? Yeah. So if I'm on the board, I have control of the company. But then I started thinking, well, how do I explain why we get KYC or due diligence on our senior management as well?
mhm.
Because the board's controlling, then why are we getting KYC on CEOs and CFOs, chief executive officers or managing directors, and then, of course, that's when I wanted to, like, there's a difference between strategic control and operational control. That's, operational control is senior management, that's C-suite. Are you, in your experience, Angela, seeing enough due diligence on senior management?
Depends what you define as enough.
Like, do you see people just focusing on the board and not on senior management?
It tends to be, but once again, I think that depends on the jurisdiction. For instance, what we might see is a deeper dive into, say, signing authorities on a bank account that's held by a company, where the directors don't necessarily have signing authority, but the CFO does, CEO, etc., because they're the individuals who are more likely to commit fraud if they've got signing authority. And as you well know, a company's greatest threat is internal, not necessarily external. So you have often, not always, but often you will see very hands-off directors or shareholders who don't necessarily know what's going on. They have put their money into an investment. They have a job. And they rely on the directors to do the right thing. Right, that's where your mems and arts come in, whereby should the directors not be doing the right thing, depending how the mems and arts are written, it's probable that the shareholders then have the right to remove the director or directors and replace them. So, yeah.
Yeah.
It depends, as you well know. It all depends. Yeah. So that's why those corporate documents are so important.
Yeah, and I think this is what you and I have spoken about this in the past when it comes time to, when people who are relying so much on checklists and their policies and procedures are so tightly written that they don't have enough wiggle room, and I think was the term you used, to then say, well, actually, we need to kind of look more into these guys as well, in addition to, to just the board, just the 10% plus or 25% shareholders. But you're absolutely right. It is the C-suite, what I call the C-suite. Those are the chief executive officers, the chief financial officers, chief operating officers, that do have, first of all, they have so much information, maybe even confidential information, so they might be into insider trading. They could be, have aggressive tax, or financial practices that could be kind of accounting fraud. So in any kind of, and these are risk takers, so, any kind of misconduct in the past, could lead to reputational mudslinging that hits you as well. So you have to be very careful what they do, have done in the past. Even if you get, and it's not just, again, getting the KYC, getting that passport, utility bill, it's about understanding who they are as well.
Yeah, and that's why the screening softwares are so important as well, because you could onboard someone who's squeaky clean and then something may happen. And there's that psychology of deciding that it's okay to defraud your company internally because I'm going to pay back. So yeah, there's like, they call it the triangle of I can't remember all the details, but when the psychologists have actually looked at it, justification, I think that's what it is. You can justify stealing from your company because I work really hard, okay, and I'll pay it back, I promise. And if any of you have time to sit and read any really short cases of how companies are defrauded, overwhelmingly, they are internal. They're done by people who have started out really great and they're honest and they've hit on hard times. They get sick, their child gets sick, they go through a divorce, they lose their house, whatever it may be. So that's a whole other
is it an article or a
seminar we can do.
Is it an article or a book that you're referring to?
There's just articles out there. If you go, the one website that has a lot of really good quick cases is Austrac done in Australia. They've got a really terrific website, and that's and they have sort of generic cases that they've cleaned up. They're not using the names of examples of internal fraud and money laundering. And of course, you understand, you steal from your company and you start moving it around. Well, then that becomes money laundering. And your greatest risk is internal. Sorry.
Yeah. I'm going to pause. We've got a lot of questions. Tom, are there any questions that we should be asking right now or answering?
Yeah, there's quite a lot of questions actually.
I'm saying about 70.
Okay.
Yeah, well, if you filtered it by answered ones, there's a lot that I'm going back and forth with. But I've got one here. If an entity is in liquidation with no distributions likely, would you still do KYC on preferred shareholders when onboarding? Also, all directors' powers cease upon appointment of liquidators.
Right.
Would you apply CDD to directors too when onboarding?
Okay, so what you're saying is this company is in liquidation, but it's still onboarding?
Looks like it's probably being onboarded by the liquidators, most likely.
Oh, I see. Okay. I believe so. I think once again, you have to look at, ooh, okay, so is this being liquidated by an official liquidator? If that's the case, then they'd be performing CDD on themselves, right? Right? So, yeah.
You
So I
would
think,
do KYC on preferred shareholders, even though they're not going to get any money because there's
oh,
no
if they're not getting any money, I
Yeah.
don't believe so. And I think that once again changes jurisdiction to jurisdiction. So your liquidators are probably accounting firms or accounting specialists, and they have like in Cayman, they have their own association, and they have a set of they have local legislation that they have to follow. And once again, I'm not an accountant; I can't completely speak to that, but I have seen um, policies and procedures. So I think it's going to be a case by case basis, and you'd have to look to what your local legislation says and what your association says in that jurisdiction.
Yeah.
Does that help at all?
So, and I think liquidation is another whole webinar in itself. It is, and you say different rules sometimes apply because they're looking at distributing the assets that are left of the company, as you mentioned. Yeah, so that is a tough one. But yeah, if there's, it's been the discussions that I've had with different liquidators is, they're usually trying to figure out if they're sending money to the bad guys,
Yes. Yeah. And the other thing is, our regs here say that full or partial redemption, the CDD has to be up to date, like this to paraphrase. But once again, it depends jurisdiction to jurisdiction. So you may have a disbursement or a distribution or redemption paid out or ready to be paid out, but the CDD is old. That person may have moved. That company may have closed. I saw a few years ago a situation where it was a trust, but it wasn't a trust deed. It was something similar where the settler of the trust and the beneficiaries were not listed. So all these assets were sort of in limbo. Yeah, you come a good, oh, I'm sorry to do this to you. It depends.
If I was, here's the thing too, if I was a preferred shareholder and I knew I wasn't going to get anything, and you asked me for all my documentation, I mean, I'm just going to.
I would be really surprised if the liquidators actually went that far. I think they're much more focused on where the money's going. They're checking, like you say, to make sure the money's not going to a bad guy. Is this individual or entity actually entitled to this? Is everything up to date? And in most cases, if someone's getting money, they tend to cooperate with providing updated CDD.
Yeah. So short answer, double check the law in your jurisdiction. Double check, but I think I would lean towards the no. If they're not going to get any funds, not necessarily. Just we know who they are, but they're not getting any money. Don't go through the process, but double check the law. In your jurisdiction. Anything else, Tom, that's standing out as a potential question?
There's quite a few, but one that we'll answer quite quickly is a couple of people have asked you to mention that website again.
Website.
Which website is that? The Austrac website?
I think so, yeah.
Okay. Off the top of my head, I don't know, but I know it's called Austrac, and I think that's a short form for Austrac, Australia, AUSTRAC, I believe. And I've in the past have found really great little cases and examples of internal fraud, money laundering, etc. And they're quick. Like you can read, they're a page usually or half a page, So, and that gives you an idea of the psyche of what goes on and why people commit fraud.
Okay, so
someone in the questions has given it to us as well, so that's really helpful. Thank you, everyone.
Okay, terrific.
Somebody else shared it in comments.
They have, yeah.
Great. Okay, so going back to our four foundational entity types, we've got the company, You're going to have a certificate of incorporation or formation or registration, again, depending on what your registration. You're going to have your memorandum of association, your articles of association. So this is your little checklist here. You will have a register of directors. That's your board of directors. And you will have your register of members or shareholders. I understand that they're called members in some jurisdictions, shareholders in another. And your key management personnel, you possibly pull from a website, or you request that if they're not on any kind of, because some registers of directors is called a register of directors and officers.
Officers.
Yes. So they might be there. That might be your chairman of the board. That might be your president or something like that. But if it's just the board, you might have to go to a kind of like, say, find out from a website or from internal documentation who these people are. And of course, you also, as you mentioned earlier, your authorized share signatories who can sign on bank accounts. That is very
who can move the money around.
Who can move the money around, who can sign on these transactions, because you want to make sure no one's inadvertently stepping outside their remit, their scope of what they can do, because again, that's where the fraud and embezzlement is coming from usually. And so making sure that you have those they're resolutions of the board. I mean, how would you find out if somebody really is an approved authorized signatory? Usually from some kind of resolution.
Yeah, or you'll get a list of authorized signatories.
Yes.
Sometimes, yeah.
Yes. So that's very key in making sure that you are dealing with the right people. Partnerships, specifically, we talk about limited partnerships. You've got your certificate of formation. A limited partnership is usually registered. A general partnership just is sometimes not registered. So that might be a partnership agreement, but it's not registered, again, depending on the country. But most limited partnerships are actually registered with some government authority, like a registrar, secretary of state. You're going to have a partnership agreement, and then you will have your register of partners. In most jurisdictions, it's my experience that when you have a limited partnership, you will have at least one general partner.
Yes.
Have you come across a situation where you've only had a general partner and there's no limited partners, maybe because no one's invested in it yet?
No, not that I can remember. However, many of the partnerships I've looked at over the years have tended to be Delaware partnerships.
Oh,
yeah. And there was one I saw many years ago, and if my memory serves me correctly, it was the general partner held like 10% and the limited partners held 90%. To me, it was quite extreme. I can't remember if that was a Cayman partnership or a BVI or Delaware. But the general partner had control.
Right.
But yeah, it was an interesting one. I think it was an investment. I think it was an investment manager, actually.
Yeah, I do see it's mostly investment managers that are LPs or LLCs. But yeah, I find that the general partner is and the general partner doesn't have to be a person. It could be another entity.
An entity. Yeah.
And this is
that's where your org charts come into play.
Exactly. So you're going to have a limited partnership, and the general partner will be an LLC or a limited company, but I find that it's mostly LLCs. And then your limited partners, they can be individuals, they can be also LLCs or limited companies again. So this is where that structure chart does come into play. And just so you know, I was actually working with a client, and I noticed that they had something that they called an LLLP, and I thought, it's a typo. It's either an LLC or LP, and I ended up, well, let me just double check, is this legit or not? And it turned out it was a limited liability limited partnership. And apparently it was, I want to say it was in the U.S. I want to say specifically Colorado. I can't remember. But I thought, I've never even, again, or maybe I have come across them and just, didn't register. But I was like, there's an LLLP, limited liability, limited partnership. And when we go again, when we're talking about the liability part, the general partner is the one who's going to be liable for the debts of that partnership. The limited partners their liability is only limited to the money that they put in.
Right.
Whereas general partner, if anybody sues them and wants to go, get money, they can go through, they can pierce through to the general partner, and that's the reason why it is also that they are usually also LLCs themselves or limited companies themselves, because they're going to try and protect their personal home assets, the individuals are. So again, that's the reason for why these structures are set up. It is all about taxation and limiting their liability.
And I think this LLLP highlights how things change from jurisdiction to jurisdiction, state to state, province to province.
Yes.
Right.
Yes.
So that is something that's why this is so overwhelming, right?
And limited liability companies, those are LLCs, very popular in the US.
Mm-hmm.
Are they used in other jurisdictions?
Probably. To be very honest, I don't think I see a lot of them in Cayman. I tend to see more companies and partnerships and foundations now, which is, I think, your next slide.
Yeah, and so you might have a Cayman company that is owned by, or a Cayman partnership that is owned by an LLC at the end of the day.
Yes. Yeah.
So that's, and I see these a lot, and so this is the reason why I wanted to discuss them, is that you're going to end up having to go through this. The challenge with LLCs is, although they might be registered in a certain state, now usually it's Delaware, is the ones that I've come across.
Mm-hmm.
An operating agreement is sometimes not a legal requirement to be filed. So they might not have an operating agreement. They will have a register of members, but that's about all you've got. Is you've got a registration and you've got a register of members, and then that's it. So all the articles, everything we just mentioned about understanding who has control and beneficial ownership, it's out the window. But that's because the members are the controllers, and then you have to assess: is it member managed? In other words, are those register of members, are they managing the company, or have they hired those key personnel? So is it manager managed? So that's what you're kind of looking into as well there. And then the last one, the foundations. I like foundations.
Okay, so here's what happened. A company and a trust got together and they had a baby, and they call it a foundation.
Exactly.
That's the approach I take. Right?
Yes.
We look at it, and it's got lots of characteristics.
Exactly. So you're going to have a charter articles that's going to establish the purpose. You're going to have your bylaws or operation agreement. That's your internal rules. That's that rule book. The register of directors or the board, who's on the board. You're going to have your key management. They should have some policies, some procedures, manuals themselves. If it's including those investment policies, because a foundation is essentially people putting money in, and it's then, because you don't have beneficial owners, do you? Sorry if I'm just gonna. You don't have the shareholders.
I think. Well, to backtrack one step, the three jurisdictions where I see foundations most often are Cayman, Liechtenstein, and Panama, and they all seem to be slightly different. They have slightly different characteristics.
Okay.
So that's something else to keep in mind. Now, once again, you and I, Kim, have been around long enough I do remember when the foundations, I think it was called Foundations Law, now Foundations Act, came out. It was, the impression I was under was it was focusing more on not-for-profits, but that's where now you're seeing decentralized autonomous organizations being wrapped in a foundation, okay, which gets quite complicated. Actually, there are some lawyers on the island who are starting to specialize in this, and watch that space because it's still a little nebulous. Okay, it's new, right? So, but the foundation. The approach here in Cayman, it seems that when you perform CDD in a foundation, it tends to skew more toward what you would look for a company.
So you say
but there are a few extra pieces of documentation that are included in it. So in my manuals, when I write my manuals, I actually have a section on if you're dealing with a foundation and you have to perform full CDD, this is what you need. And it does go past what you would normally ask for with a company because there are a few extra players, characteristics, okay? But once again, let's go back to the basics. Where's the money coming from? Who's setting this thing up? Why are they setting it up?
Yeah.
All right. Is it for succession purposes? Is it an NPO? Is it holding it down? What is it doing? All right. That's the other thing actually we haven't touched on is why set these things up and what are they doing?
Yes. Yeah. Purpose. Yeah. The purpose and the scope. And I think with foundations, and I don't know what the Cayman regs or any particular jurisdictions regs say about due diligence on foundations. But again, to me, it's all about as well, where's the money coming from? So you're going to look at those, hopefully request some financial statements or report, and audits, any kind of tax returns, if you can get them, because again, I know some people are like very hesitant to provide that information, but it's all about the source of the funds. How is this foundation being funded? Who are the key donors?
Yes. Why?
Yeah. And then understanding, so then the foundation takes that money and invests it or makes grants. Who's then getting it back? And again, it's all about that circle. And you kind of hear about here in the States, you hear about how, I hear about with universities. A university will be given a grant or funding of millions of dollars, and then the next thing you know, you're hearing about some politician being put on that university's board that never shows up or overseeing some aspect. And of course, it makes you wonder, did that money, that grant money, was that a way of paying off a politician or somebody's, so you do hear about these kind of things. And again, this is where the conspiracy theorists can kind of go off to find out how that money is being circulated to pay these bribes or pay people off, kind of thing. But that's what you're kind of looking for, I think, is where's the money coming from, where's the money going to, and seeing if there's any kind of connection for money laundering or terrorist financing purposes.
So do take the time to read about foundations if you can, and those three jurisdictions are the three: Panama, Liechtenstein, and Cayman. Those are the ones I see the most common. Most often.
And again, going through that information, again, you're not just asking for their tax returns or their financial statements and then just sticking it in a file and going, yep, I've got it. You do have to kind of look through it, which kind of begs the question a little bit, because as AML compliance officers, we're not, we're not accountants. So, but I think it's one of those things that if a financial statement or something, as you're reading kind of through it, would, if something's like just really screaming at you, okay, yeah, 90% of their funding is coming from here. And again, this kind of now goes down to those drawing the structure charts. So showing a very simple structure chart here, just so you guys know. And it is, at the end of the day, it is all about the drawing. And like as you mentioned earlier, Angela, okay, this is the company that's my client. This is who owns it, how much, and this is who owns those companies, because it's rarely just individuals. And so you've got to understand who's at the top as well as the kind of individuals. So this is a very simple one. And I picked Google LLC, and it's owned by Alphabet Inc., which is listed on a NASDAQ. Simple, very easy. But I was doing some research, and of course, Alphabet Inc. also holds a UK private limited company because they acquired it. So that's the reason why it's not its traditional LLC holding. But all those would be very simple because these are all subsidiaries of an approved stock exchange. But then we can go into, and this is still fairly simple. I mean, I'll never forget having one that was a huge chart, and I mean, and it was like 5 or 6 layers, and it had, Panama and Cyprus and Russia and US. I mean, it was all over the map. And I can remember sitting on my floor in the office, drawing it out, because as I got the due diligence documents, because it's like putting together a piece of puzzle.
And it's done purposely, and not necessarily to mislead compliance people. It's often there are perhaps taxation issues. Perhaps you have political issues come into play. I actually, about 10 years ago, I spent 2 full solid working days with a lawyer, and we had the same thing, the conference room, the huge table, and we just laid everything out, and it just was layer after layer after layer after layer. And the top was a bank in a former communist country that was publicly traded, and at that time was not sanctioned. So, but and the other thing I've seen, not that often, but occasionally you'll get company ABC owns company XYZ that owns company ABC. Cyclical, okay? And you go, okay, well, once again, let's go back. Who has control of this thing? So back to your org charts. The one thing I learned a long, long time ago is when I do my org charts, I in bold go, this is your client, Angela. Boom, client. Yeah. Whatever color, blue, hot red, hopefully you're not colorblind, okay? Boom. So I have to keep that in mind. And what services do we provide to that client? And that also will help me to sort of keep going back to those basics, right? Yes. But you're right. 5 layers is, if you're in this industry long enough, you will come across something like that. So be prepared for late nights, sitting on the floor, trying to figure it out.
Yeah, and that's where Scotch is.
Yeah, yes, yeah, cut and paste.
But it really, I mean, and I draw by hand. I mean, I have to do it, I do squares if it's an entity, circles if it's an individual, triangles if it's a trust. If it's, I use lots of colors. If it's in a high risk jurisdiction, it gets a red background, that kind of stuff. Cool. So you find your ways, because at the end of the day, it is all about then kind of looking, and in this particular instance, okay, I've got Mr. A and Mr. C that are directors. Oh, those Mr. A and Mr. C are also limited partners ultimately. So I might start looking into Mr. A and Mr. C, putting my focus on them because they seem to be repeating, so they have more control kind of thing. So yes. That's the reason why that. I'm going to move on. Sorry, I just realized we're kind of into our last 5 minutes here. And for the person who was asking about anstalts, I do have that in here.
Okay, great.
Well, so we might go over just a little bit. I do apologize. So quick question. What if the register of shareholders has ABC company as trustee of MNO Trust? Do I obtain due diligence on the trustee or the trust?
Okay, so because I'm a compliance officer. All right. What I do is, all right, if we're having a good day, the trustee's regulated and it makes it really easy.
Exactly.
Right? So why not do it? You've got it there. It's on the screen, right? Yeah. Then the trust. And you want the trustee because the trustee can say a lot of really interesting things that, we have to do a session on trust. I've seen so
yeah, absolutely, yeah. I do what I look for. As you say, is the trustee regulated? Yes. Fantastic.
Yeah, thank you. Yeah.
Not regulated. I do consider ID and verification on the settlers and beneficiaries. Especially if I can't see a clear family connection.
And where's the money coming from? The settler, right? Even though the settler settles the trust and falls away, the money's still probably from the settler, all right? Whether it be I saw an old trust, once again, they had taped in a coup around, like at the back of the trust document, it was taped in. Yeah. I've been in this industry far too long. So, and the other, just as an aside, is a good laugh. I saw once a beneficiary of a trust. Who was the beneficiary? Not a family member. Intimate friend of the settler was what I was told.
Yeah, I saw a business partner, and I was like,
really? Yeah.
Yeah, it was just like, okay. I guess, I mean, who knows the reason why, but yeah, it was. Alternate directors, do I need to obtain due diligence on them? Yes.
Well, once again, it depends on the legislation of your jurisdiction, but in Cayman, they don't seem to say, well, ultimate director, it's okay. Yeah, director. And our regs say that you have to perform CDD on all directors. So if you have a company with 30 directors, right? Sometimes a judgment call has to be made.
I have come across 4 or 5, and I know traditionally it's 2 directors or something like that in the past.
Historically, it was that changed in 2017.
Okay, because I would rather do all directors because you never know if somebody's going to come and go.
Yeah. So that's another reason you want to keep reviewing your files based on your risk rating. So,
all right.
but that's a whole other,
So this is that Liechtenstein Anstalt. He says he was doing something. He goes, how to identify beneficial owners, and there's no members or shareholders. Basically, this is one of those situations where it is a hybrid company. So it's kind of a hybrid between a company and a foundation again. And
all right.
yeah, so it's not a hybrid between a company and a trust that becomes a foundation. It's the next generation.
All right.
Although I found out these have been in existence since 1920s. So I was doing some research last night on this. And so here's a little bit of background. I decided to also go back to the latest mutual evaluation report in to see what the FATF is saying about it. Couple notes here as far as basically saying that a little bit outside of the scope. I found it interesting. They're commonly used for asset management, estate planning, things like that. The founder usually has a lot of control, but I did find out that they usually, and again, I don't know the specific law, but it looks like they usually appoint a trustee and a board of directors. That is a requirement. So I think the focus, my answer to that was kind of like, well, I would focus on the founder if you can find out who it is. Definitely the board of directors, which is supposed to be public information or available. Because the problem with a lot of these situations is that you're dealing with privacy laws. Whoever's coming to you is going to go, I can't give you that information due to our privacy laws. I see that a lot. So this is how I again, my experience, it would be, all right, find out what you can, get what you can, just the documentation that sets it up, if you can. If there is a trustee, it's a trustee regulated. That helps. Even if it won't tell you exactly who, and maybe this is where I wanted to ask your opinion, Angela. If they won't tell you who is the founder, if they won't tell you who is a beneficiary, but you're dealing with a regulated trustee, are you comfortable with that, or do you still kind of want to know?
Okay, I'm nosy, so I want to know. However, okay, there are sort of sometimes ways to get around this. The decision might need to go to the board. Are you comfortable with this? I'm your AMLCO. This is what I found. The other thing is sometimes you can actually get a written letter, like something similar to a comfort letter that says, well, we, Anstalt 123 in Vaduz Liechtenstein, will provide the information should the regulator request it. I mean, there's sort of sometimes ways to get around this. It's just what level of comfort are you willing to accept? Also, what level of risk is involved with this client? If this is a lower risk client and you are comfortable, then you should be okay. But if this is a high risk client, based on your risk,
probably a shareholder or investor of a fund, most likely the Anstalt is.
okay.
The other thing I was kind of thinking is, what if I would want to see, are they like a 25% or what significant holding do they have? Kind of maybe even start there. Are they even a 10% plus shareholder? If they're not,
then yeah, sorry, I've got my gardeners suddenly have materialized. My apologies. And of course, they came with leaf blowers, right?
Yeah, okay, great. So, and I did find a very good, this is from Grant Thornton article that I found online. So that is available. And again, that it just kind of, again, goes back to when you hit these non-standard, or these hybrids or these derivatives, you're going to have to just do some research, find out. And at least in today's world, we've got Google, we've got ChatGPT, and you can usually find something there. So our key takeaways today was you're going to have to research that legal structure if you're not familiar with it. You're going to have to read those corporate documents, look for some clauses. You're going to have to understand who really has that control. Draw the organization chart. There's no getting around hand drawing in my mind. And make sure you know those various roles, and then of course summarize your findings. My thing is always think 5 years from now. Maybe you put it to bed today, But 5 years from now, if things blow up and you're having to finally answer some questions about how you came to that risk assessment, make sure you've summarized everything that you reviewed and put so that you can defend your assessment really effectively.
Yeah, totally. So the next person who takes over your job, when they pick up that file, they understand the reasoning behind things, even if it's that simplistic.
Absolutely. All right, so
So
I know we've gone over a little bit, a few more, and I apologize we didn't go through the 99 plus questions that are posted. I've never seen this many questions. I'm going to review all these questions, and I'm going to see what I can come up with to address some of these questions, because I bet you there's some good ones in there.
And good luck to everyone. It's a really, really interesting space. Don't let it intimidate you. Learn your terminology, create your own cheat sheets, create your own org charts.
Yeah.
Yeah.
And keep learning. And just so you guys understand the challenge here. So this is my certificate from 1998 of a class I took from the Community College of the Cayman Islands, and it was a 14-week course. And in that 14 weeks, this is what we were going. We were going through all the different types of companies, amendment arts and articles and clauses and things like that. So we can't cover everything in 1 hour. What I learned in 14 weeks back then, and of course, and there's even so much more now. So look for local training at your local law schools or community colleges.
And also like websites for governments, like I think the Ministry of Financial Services here in Cayman probably has a lot of stuff. So check those things. They will give you a really quick synopsis on the types of companies you can incorporate in the Cayman Islands or in other jurisdictions. Just read, and as you read, the more you read, the more you will start to understand the terminology, and that really is the
You also have to consider yourself a paralegal. You might not be a lawyer, but you do have to consider yourself a paralegal in the sense that you've got to read these regs and the company's laws, not just the AML guidance stuff, but the company's laws. And there are some great journals that are online as well for just to help you understand why these companies are set up the way they are. What's the, again, it's at the end of the day, it's usually about taxation and liability. So there are some free, like I said, there's a Harvard Law School forum on corporate governance. I thought that was really interesting as well. There is a book. It's about $300. Business Structures, also again quite good if your company does have that kind of money, so that you've got it. So do please keep learning. And again, I'll read through these questions and I'll see what we can do. And for those of you that do come across any of these hybrids, please do drop them in the comments or the question box with that, and I'll look into those and do some research and make sure we cover them in a future webinar. We will cover trust in a future webinar too. I'm also excited to invite you to our next Gray Matters webinar. It's scheduled for February 12th. Sorry, a bit of a conflict with your thing, but it's only an hour. We will be exploring that very relevant topic, the rise of digital assets. We're going to be looking at crypto, NFTs, DAOs. I call it Crypto with Kara. That's Kara Hennessy. She is from Provenance Compliance, and she's got a lot of expertise in navigating this exciting new kind of field. So please do join us for that. Tom will be sending out that information. And again, thank you. Finally, thank you, Angela. You wanted to mention as well, again, February 12th and 13th is your fund administrator. Where do they go? What website?
Check out cifaa.org.ky. That's the website that will take you to the registration. It is basically, like I said, 2 days where we have 10 different speakers who come in and talk about the life cycle of a fund. And even if you're not in fund administration, you could be working for a company that incorporates funds. We've had regulators come in, we've had marketing people come in, we've had lawyers come in. We've been running this since 2006. I keep thinking it's going to run out of steam, but and this is the first time we're offering it remotely. So it's 2 full days and it's really intense.
Yeah, much needed. Yeah, that's fantastic. So thank you, Angela. Also, thank you to Tom Gardner, who does assist in the background. But most of all, to our audience, thank you for your questions. I realize we didn't get to them all today, but I will look through those questions and see what I can find and pull for either future or kind of, for some of you, I know I have actually kind of looked at your questions and then did some research and responded. So I'll see what I can do there.
And
Thank
good
you so
luck,
much.
everyone.
Yeah,
Okay.
good luck. Thank you for your ideas on topics that, do need to be discussed. Really, I learned so much from you guys, from the audience questions.
Yeah.
You guys throw me more curveballs, but I love it because it keeps me challenged, if not entertained. So please continue to share what you're learning here with your colleagues and peers, and share those registration links. We encourage others to join so that we can all kind of keep helping each other as we face these constant challenges in this evolving landscape that this particular career brings. And I do look forward to continuing our journey of learning and improving together. So have a great, wonderful day. And again, very happy New Year.
Thank you.
Thank you very much. Thank you, Angela.
You're very welcome, Kim. Always a pleasure. We'll catch up later. Thanks, everyone. Bye.
Bye.